How's it going today? Today we're going to talk about the reason I sell a stock. And I normally don't sell. I'm not really a net seller. I don't really trade. Well, I do trade, but I don't really talk about it on this channel per se. Make sure you like and subscribe. This is kind of a long-term growth portfolio kind of thing, but I do get into it when people ask me about it, but I really don't I don't really call myself a trader per se. My trading account's smaller than my larger account. But anyway, my growth account. Let's get right into it. 3 reasons why I sell a stock, and it's really just kind of 3 reasons. The number one reason, we're going to get right into it, is basically the future outlook looks bad. And this is the number one reason why I sell a stock. This is the only reason I look at stock. I look at a company, which I normally haven't really sold any company. I've only sold maybe, I think I bought some JP Morgan and Bank of America and some Southwest. I think I sold them. I never recommended them on this channel. It was kind of a value play. I bought them because they were undervalued. Did some models on them. Eventually sold. Actually, it was probably December of last year. I just kind of cashed out of them, and they did pretty well for me. I made a little bit of money on them, but I just kind of sold because I don't think they could outbeat the market. And that's why I invest, is to beat the market. You know, that's the reason I buy these things. So essentially, if the future outlook looks weak, I normally just sell. I always sell when the future outlook looks weak, like in Southwest and the airlines. I was just thinking, well, I don't see how they can charge anything, and I don't really see how this company can keep growing. And just like the banks, I'm like, well, you know, I guess they grow with the economy. But once they hit a certain valuation, the valuation is priced into the stock, so they're expecting a lot more growth. I don't think the company could have grown that much, being what it is. So that's the only reason. And it doesn't really have to be bad. It just has to be, it doesn't like it. I don't see it being an outperformer, and that's why I usually sell. And normally that's why I sell a lot of these companies. I'm thinking of other ones I've sold. I don't really sell a whole lot, honestly. I normally just kind of cut back positions. And that brings it on to the next reason why I do sell stocks. And it's because it's oversized in my portfolio. And it's what I call a high quality problem to have. It's a good problem to have, per se, because that means you picked the stock. Let's say you picked it at 10 and it goes all the way up to 1,000 or 100. Obviously, your investment, your size of that position will probably be very, very massive. And the way I invest is I keep adding to those ones. As it goes up, as it doubles, I might add a little bit more. I can keep adding to those ones until where it's almost sitting at 20, 30% of my portfolio. And I go, wait a minute. Then I realize, then the stock maybe runs up, then it maybe doubles from that. And then it's almost 30, maybe 40, 50% of my portfolio, where I'm like, wait a minute. That's what happened with NVIDIA. I didn't really expect it to run up that much. I knew it was going to go up because I really don't have like a price target per se on these stocks. I just kind of buy them knowing they will outperform the market in the long term. And that's what kind of happens to these companies where, and that's why I sold my NVIDIA a little bit. I cut back the position just because it was such a massive position. And actually, it's weird. Actually, then I kind of bought back into it when it came down a little bit. But that wasn't the goal. That wasn't the plan. And that was just kind of how it turned out. I didn't really expect it because actually I sold it right back in 2018. It was like the fall. And then it kind of went down heavily in the winter. And I wasn't planning on that. I was just like, well, this thing is getting almost, I think it was 30%, 40% or 30. It would depend on the day, because it would basically, well, the market's up, but NVIDIA's down, so I'm down, and it would drag my whole portfolio. So I was like, well, I'm just going to sell it a little bit, bring it down to about 5, maybe now it's sitting about 8%. So that's a little more reasonable rate. But once it hits around 30, 40% of your total portfolio, you have to, in my opinion, scale back a little bit, take a little bit off the table so you're not, solely investing in one company, because anything go wrong, So that's why I really don't like those positions when they get overvalued and over just big. And that's normally the reason why I sell it. And it happens quite a bit sometimes when you pick these growth stocks where you just keep adding to them. They just get massively in your portfolio, and then you're like, wait a minute, I have to cut back a little bit on those. And now the last reason why I normally sell is I see a better opportunity. I normally cut back a position and go, you know what, I believe this position, this stock as well. I did the same thing with Union Pacific, actually, when I sold, just because I thought, you know, Union Pacific's not like a bad stock, but I believe I can get a better growth story and a better investment off of something like maybe the Trade Desk or Shopify, because I always live by the saying, I don't want the good stocks in my portfolio, I want the best stocks. So that's why I normally sell, just because it's more like you know, I don't take the money out of the market and then I just kind of sell. You know, that's what I really kind of think about. And I always live by the saying, if I need the money in for years, I don't put the money in the market. So I'm not one of these people that goes, hey, I put the money in the market, now I have to take it out and try to time it. I don't do that with my investments. I want to hold on for at least 3 or 4 or 5 years, maybe even longer. You know what I mean? Like Google, I probably won't sell that. I mean, I've been holding that for about 2015, and I haven't sold it. Disney, it was actually my first one back in 2013, and I haven't sold it. And I probably will never sell it. I just kind of like the position. I think it's good. But some of these stocks, I probably, the goal is not to sell them. But if I see a bigger position, a better position, or a better stock that comes up and I raise kind of some money, then normally I go buy something. That's why I sold Union Pacific. I thought the economy there's no way, I believe once the economy hits certain part, and that's why you have to understand what your business does. It kind of delivers things. And I was like, well, I don't think the economy will grow any more longer, just because I don't believe there's really any more. It can't, once it hits a certain speed, it's like a car. Picture it as a car, you know, like going like 50, let's say it goes 80 miles per hour. There's more likeliness that car, I mean, let's say the top out is 100. So what's the likeliness? That thing hitting 100? Or that thing's slowing down to 70, you know, or slowing down and stopping, you know what I mean? There's less upside, you know, potential, but there's more downside than upside, you know, so that's why I kind of thought about the economy, and that's why I sold Union Pacific. I actually bought some Trade Desk and some NVIDIA, because I thought they just have better aspects. I mean, it's not like they were bad, but like I said, I want the best. I don't want good, I want the best, and that's all I got to say. That's about the 3 reasons I sell a stock. That's about the only 3 reasons I recommend selling a stock. And once again, it's not really any performance on the stock. A lot of people ask me, do I cut positions? Do I put stop losses? No, I do not. I don't put stop losses at all. I have a review coming up, and the stock was down over 50, 60%, 70%, and now the stock is actually beating the market. It went up. I picked it at pretty much an all-time high, and then it crashed 70%, but now it's actually beating the market. So, I mean, where would I put my stop loss then? 20%, but then oh, wow, I won in the short term. I missed that big thing, that big drop, but now the stock is winning the market. But if you just bought and hold, you would actually still beat the market, and that little dip didn't really matter, you know? Maybe you would have added to that position. But honestly, that's all I got to say when to sell a stock. And I don't use stop losses or anything like that. Anyway, thank you for watching. And make sure you like and subscribe. I do more videos and everything like that. And thank you. Bye.